Happy 2026, everyone. Welcome back to the Kingscrowd podcast. We have a lot of amazing things planned for this year and even just kicking off this month. So lots of good stuff to discuss. My name is Brian, your host from Kingscrowd. As always, I'm joined by Scott Kitun and Teddy Lyons. How are both of you guys doing? Have a good New Year break?
Oh yeah.
Muy bueno.
Nice.
Muy bueno.
Hopefully you guys are healthy. I had a little bit of a sickness there, but lots of good productive work. And speaking of, just the new year. So we're going to be putting out our chart for the funding recap for all of 2025 in terms of the online private markets, and strongest year since 2021. So numbers are still preliminary. It's looking very good. But if you go back to our first half of the year, 2025 breakdown chart, we had written and predicted that we would be ending the year around 902 million. Not to tease it too much, but we are almost spot on, it looks like, for landing around that 902 million mark. We'll see what the final numbers come out to be. So
all credit goes to you. There's no we. There's a mouse in your pocket. There's just you. You called the number. Call your shot.
Yeah, it's something that obviously could have been super variable. That was complete luck that it was that close. But Reg A saw super strong growth. I think those can be some of the trends we'll probably get to here talking about in terms of just 2025 and what we might see looking forward. But a couple other quick announcements. So funding report, make sure you're on the lookout for the 2025 recap for next week. We'll be releasing that. Another thing that's been released, Kingscrowd Pro. So for all of you industry professionals who are out there, if you're a marketing agency, a consultant, a funding platform, you have a different needs in terms of your data, your analytics needs than the typical investor or founder. And so Kingscrowd has actually come up with a completely new tier and product focused on helping you to be able to do your business development, your sourcing of leads, being able to track your clients in terms of their performance and their portfolio, being able to report easily on all them. So Kingscrowd Pro now launching. Make sure you can head over to kingscrowd.com and check it out. And a lot of great features. We'll do some demos, I'm sure, of that and some webinars of that in the future. Last quick announcement, just to get off the docket. But as a reminder for everyone who isn't already aware or hasn't already checked it out, we, Kingscrowd, are raising capital ourselves on StartEngine. So head over to StartEngine, check out our fundraise. It's going to lay out a lot of our business plan. We'll be talking about some of these different things like Kingscrowd Pro, like some VIP tiers that we're going to be doing, some of the other great data partnerships that we have, as well as building out parts of our business like our advisory-focused line of business, which focuses on helping the founders, the entrepreneurs who are raising capital. So head over to StartEngine, check out our raise. Lots of good stuff. But let's jump into the discussion today. So today we want to focus on two things, I think. Let's do a quick recap, guys. We can kind of circle back on 2025. What were any of your big takeaways, big themes that we saw? Then with that as the foundation, where do we see 2026 going? Let's get some bold predictions. Don't be afraid to, put it out there a little bit. Everything here is within friends. We're all just kind of speculating, right? No one's going to know the future, but I think it'd be interesting based on our insider knowledge and some of those trends that we really have insights on. I think everyone out there who's listening and watching is interested in where we think it is going. So let's kick off 2025. Who wants to jump in? What do we think in terms of just big trends or things that maybe the start of the year you did not expect that transpired throughout 2025?
I'll jump off with what I did expect because I got to participate in some of it. I think the infrastructure play was really obvious. The idea that retail was going to become a primary target. We could talk all day about liquidity, why that is, and why retail is an institutional target now. But if you realized how quickly they were going to view retail as a viable, desired audience, the infrastructure that everything in private operates on is just insufficient for what retail is used to. And so it was not a surprise to me that they saw interest, they saw the demand was real, they saw opportunity was real, they started passing laws that enable retail to participate. And then it was like, oh shit, we got to build a lot of stuff. We got to be able to make this work. And I think you saw, billions of dollars literally invested at the venture level from not just like your typical VCs, but like interchangeable markets, BlackRock, Blackstone, you name it, they were throwing money around, acquiring platforms, investing in things like Geo Wealth and a handful of other ones. iCapital was a huge player. You just saw this big arms race come in to like, now that we know there's interest in acquirability of retail and we need retail, I'm just going to say out loud because they want to try to, access liquidity for their LPs, we need a new infrastructure. And we saw something I predicted, a year ago was 25 is going to be the public-private market blur. And I think you saw that more than ever. And so that would be one of the first things that kind of caught my eye was you saw institutions enter the retail game to the point now where it almost feels weird saying retail private markets because it's not. Like they're now in the game, and that'll lead into the 26 part, which I'll kick over to Teddy before we get to that. But and the last part, I think, is the types of investments. Brian, you hit it on the head with your prediction on the amount raised. I don't think for me it's a surprise at all that 25 was more or less the year of Reg A. I think the CF stuff is nice. The portals, I think they're really about reg tech now. They're not really the platform. I don't think you're going to have a huge successful platform building only for reg CF. It's about high probability of success, large raised assets that are real. And Reg A allows much more money, much bigger game to play. And I think in particular, when you're talking about retail, I think that it is, you need to have a lot of volume. Or it just, and it's not, I'm not saying that retail has the interest and demand and all that, but if you bring the right product, right fund, the right company asset, the demand will be there because it's a good product. You see with OpenAI and SpaceX and all these other offerings, like if it's there, good product is there, people are going to invest. I think that in order for the incentive to be on the right size for the other side, for the institutional side, for the companies themselves, the volume of investment dollars has to be high enough. And for all the years we've been doing this, it's been this sort of like, hey, Reg A is expensive, Reg CF's cheaper, start there. If there's interest, increase. And then if you want to run another campaign, Reg A, do that. I think what you're seeing is people going like, look, it's either worth it or it's not. If we're going to go and do this, we're going to spend $80,000 or $100,000 or whatever the number, and we're going to go raise 20 million, 10 million, whatever it is. I don't think the interest from premium assets and premium funds and institutional partners, I don't believe that their interest is to say, hey, let's go raise 2 million and see, or $500,000. Like, I just don't think that moves the needle for them, which has, we can get into it later, but that has obviously implications of who else is going to be on the platform and the portals and what Reg CF is for, and leading into what I think we'll see in 26 as a result of that as well.
Yeah. Great, like macro picture, and also kind of weaving in where, sometimes we get really focused on kind of the online private markets, but where it's sitting within sort of the bigger macro picture as well.
Yeah.
Now, Teddy, how about you? Any big takeaways? And I know you do especially a lot of deals and analysis, looking at things for the Kingscrowd Capital Fund. Do you notice any trends, or do you have any takeaways for 2025 that's memorable looking back now?
Yeah, I think this was a very good year for finding companies that, number one, either have strong VC backing or have a VC firm leading their current round, and they're just kind of opening up a portion of it to retail. I think we've invested in a number of companies this year that have that. And I think hopefully that's kind of pointing to a trend within the private markets that Reg CF and Reg A are kind of, solid avenues to raise capital and kind of not seen as kind of taboo from the VCs. Very recently, I talked to a founder who she very much was under the impression that kind of Reg CF is seen very negatively from the VC community, which kind of contrasted what I kind of seen throughout the year, where we're seeing more and more VC-backed and VC-led rounds raised in Reg CF. So I'm hoping to kind of see a continuation of that trend into next year. We reviewed on this show a few weeks ago that in 2025, it was about just over 20% of Reg CF equity raises had VC backing. Hopefully next year will be another banner year for that, because I think that just adds more and more I don't want to say legitimacy, but I think it's just a great look for Reg CF when there are a lot of VC backed quality companies raising.
My takeaway, Scott kind of covered a broader picture. Teddy, you have a lot of the deals and the VC backing and everything angle. I think the biggest thing for me, which wasn't necessarily unexpected, but there was a lot of change, and I think setting a lot of the foundation for regulatory change and reform. And I think that's going to set the stage for a lot of what we might expect to see in 2026. So if we wind the clock back, right, remember early 2025, everything was about the chairman, the SEC chairman, and having Gary Gensler, getting him out. Trump was all about, getting him out. Atkins came in, got confirmed, very pro capital formation, right? So having a new head of the SEC being pro capital formation. Plus, this is actually hot off the presses. We forgot to mention this. SEC Commissioner Crenshaw actually just announced 3 days ago that she's departing the commission. So there's only going to be 3 commissioners. Commissioner Peirce is still there. Now, her term was supposed to expire in 2025, but that doesn't mean she can't stick around for a little bit. But it opens up the potential of having 2 open spots for something really interesting in 2026 as well, where if the White House nominates 2 more commissioners, potentially having Republicans, there's a limit on how many Republican commissioners you can have. But I think the regulatory backdrop was a big part of the story in 2025, where I think we saw behavior driven by some of the platforms, these online funding platforms, and decisions they were making in terms of what things they were pursuing and not pursuing, of seeing kind of where that was leading in the future. And because of that, I think we saw a lot of interesting things around like business models too. But we saw, lots of actually the funding portals that were funding portals became broker dealers, and that opened up their aperture to be able to do different types of raises, solicit investments for those raises. So instead of them just posting on their website, being able to actively build like an investor list that they're calling or emailing. So I think we saw a lot of change on like the infrastructure side. Now, zooming back out, I think we also saw a lot related to tokenization, right? To use a broad term, but we saw everything with the mirror tokens that happened around kind of secondaries and being able to tokenize those, and potentially, yes, none have been offered under Reg CF yet, but being offered to accredited investors and international investors, even being partnered through Robinhood. So we kind of see where that's leading. NASDAQ private markets or NASDAQ has also been kind of doing some interesting things, or there's been some press releases around tokenization efforts there. So I think that's maybe setting up the stage for what we can talk about in 2026. But overall, I think was a good year for us, right? Shifting the ability of these issuers to be able to have more avenues to raise capital, be more flexible, which means that more investors, more retail is going to be able to get access to these investment opportunities. And just very excited for what 2026 is going to bring.
Yeah.
So
I just say one more thing about just kind of secondaries in general. So I think this year we obviously saw a major shift in Kingpin StartEngine's revenue mix to be, I think we're going to talk more about StartEngine on another show, but I think about 70. So they released their 10Q in October, and it was like 84% of their revenue basically in 2025 up to that point was StartEngine private revenue. So it's not only them, WeFunder has, the WeFunder Venture Vault, where they do a similar kind of SPV structure. So I think it was a really interesting year where we're kind of seeing a lot of resources being put into building out that side of these Reg CF platforms, these investment platforms. So, and obviously those are to accredited investors only that can access those opportunities, which is tough, but unless you want to talk the whole mirror tokens, but that's a whole separate issue. But I thought that was interesting and something I wasn't necessarily expecting them to lean so heavily into.
You guys know on ChatGPT, when you're making a video or you're making like an image and it starts to show you the rendering, and you kind of like, you can see where it's going. You can almost see the mistakes that are coming too. So you're like, oh shit, I wish I could stop this and start again. That to me is 2025 in our market. I can see 26, 27, 28, and probably even 2030. And I see like the head and a little bit of the neck, and I can see a little bit of fuckery going around with the middle part of the picture. It's not totally clear. It could go another direction. I think what happened and what you saw, I think is really paints a very clear picture of where people think things are going to go, where the money and support and momentum is at. I think the SEC who's on the committees, I think is starting to paint the picture of like what's going to be allowed and what's not going to be allowed and who they want on that committee. If we're going to, pursue here, I think you could go all the way up to the Trump level with the Genius Act and the Trump accounts, even if you want to go that far. And we're enabling access to retail in a way that's managed so that the big players in the game with all the money don't lose a bit of business, and they can stay in the game and they can manage it and they can run accounts and do all the things that they've done for a long, long time, but also get to retail before general portals can like take business away from them. And we could talk about that in another show, even like that's a whole different topic as to good or bad. But I think the tokenization, the investment, $52 billion in real world assets that have been contributed and put on chain, doesn't mean they're invested in, doesn't mean anyone's collecting on it, but they are now available on chain. The mirrors is just an example of trying to be innovative, of creating a financial product that it skirts around some things that were the kind of the difficulty for retail. I think you can't not mention the Hamilton Lane as a product, only because it sort of set the precedence that funds are a thing, and then that sets in the whole 40 Act fund as kind of a deal breaker now. If you're going to do a fund, unless it's for the highest qualified purchaser, it almost has to be a 40 Act fund. Otherwise, it's not. It's kind of shut off to retail, and that's something you wouldn't want to do going forward if you're building. Then you move into Robinhood announcing. I've called this for several years, waiting for this to happen, and it finally did happen. It hasn't actually come out yet, so this is still a 26 thing. But their venture fund, and doing so as an ETF, which then brings you back to what Teddy was talking about with the vault and with all the, StartEngine's private, 80% of the revenue come from private. I have said this on shows before, so I'm not sharing information. Republic, 60+% of their money is coming from their digital business, which they just spun off this year, which means they're in a different business as well. I think we're looking at an image of the future that is saying there's going to be consolidation. If you're not in if you're just only in retail and you're just trying to nickel and dime your way one deal at a time, you're just not probably going to be part of the big conversation. If you are partnered with Sequoia or Y Combinator in the case of WeFunder, or large funds that enable a true fund manager to have tier 1, tier 2 access plus secondaries for you to invest in the fund and not individual deals, and then you want to invest more or less into individual deals, the tokenized version of this allows you to be an investor who says, hey, I want to put into this fund, which has exposure to this, but then I also want OpenAI times 3, and I also want to be in here and here and here. We're setting up a place where the institutions still manage the bulk of the wealth. It's iCapital, still the distributor of the bulk of the assets as far as to the managed investors. You, as a retail Joe, can come into Robinhood and access some of this at a fund group level. And if you want to be on Kingscrowd and pay for Kingscrowd and learn and invest on your own, there's going to be plenty of deals that you can sidecar into, secondaries, all kinds of stuff. What I think is going to happen, this isn't a 26 as much as it is like, you'll see, it's like, this is what I see at 25 to 26. In 26, I think the picture becomes much clearer. 27, what you're going to see coming into, in 26 towards 27. I sound like a weatherman right now, but what it's going to look like, going this way, what it's going to look like is, I think that the self-directed investing has arrived. I think the idea that you can run a fund, you can run a large cap, and you can raise capital directly without going public fully, I think has arrived. And I think that there's a whole bunch of fund managers and investors and activist investor groups who are going to come out of this and go, holy cow, we can make a substantial investment into a said company directly without having to go through all these other hoops or paying fees and premiums and all this other shit. I think it's a whole new ball game. And the technology, the underpin technology, is the tokenization, the fractionalization, all of the regulatory stuff Brian's talking about, which enables them to say it's worth doing because we also can go direct to retail. And so what I think you're going to start seeing is this getting tightened up, infrastructure becoming much clearer. We've talked on the show many times about the problem when you go public and you've raised capital this way, and we get stuck holding the bag and can't get out in time. I think those are the kind of problems that are going to get shored up here because there's too much money at stake. And we're entering the evolution where people can participate, like the transaction will be direct, and you'll see a lot more of it. And I think you could find a guy like me and Teddy and Brian decide to put together a fund on our own and become an activist investor in one of the companies that we found on Kingscrowd that we think is really, really good and want to own a larger than normal share of, we can convince them to go direct, invest directly in them, allow you all to participate in that, and there will be secondaries for you to get in and out of. All of that was not possible when we woke up on Jan 1, 25. All of it. And now we wake up on Jan 5, whatever we are now, of 26, and all that is possible. And that's insane when you think about the longevity of this market we've been talking about, that all that shit happened in 1 year, calendar year. Incredible. Not even calendar, because we didn't see activity like this till March of last year. So this is like 9 months. This market moved 3 years, 9 months.
Teddy, what about you? What do you think? Looking ahead.
Follow that up, Teddy.
With your crystal ball, what are you seeing in the future?
So I'll give a more broad prediction of just kind of like AI in general. I was talking with a family member over Christmas, and it was my dad, and he said, "There's absolutely no way." He said this like so definitively. He's just like, "There's no way AI is going to solve a disease like cancer." And I immediately responded. I was like, "Well, I think AI can be a great tool to help scientists cure a disease. We'll give them more insight into what molecules to pursue, things like that." And then he goes, "Oh yeah, so what are you, an OpenAI spokesman?" Jesus. So I was like, well, all right. But I think that AI, I'm hoping and I'm predicting in 2026 that AI will achieve a major scientific breakthrough, something that would not have been possible before the creation of large language models. And I think you could argue that AI has already helped produce some real scientific breakthroughs, things like some protein structure predictions, new drug candidates, but those generally involve a kind of more narrow specialized systems or a kind of AI acting as a powerful analytical tool. And I think what hasn't quite happened yet, and it's something that Sam Altman talks about in some of his podcasts, is a moment where a general purpose AI model like the GPT series is really credited as the primary driver of a new experimentally validated scientific discovery.
Which I think it maybe not exactly to that point. I saw something like a week or two ago, though. There was a mathematical paper where for one of the first times, I think like one of these models working with someone, but came up with like a novel proof to this mathematical thing that hadn't been solved before. So
for sure. Yeah.
It's not impossible, right? To imagine in a couple months, even based on like the rate of change of how things are going, that we could get there.
Yeah. No, and I think, and when it comes to, pharma, it's, a model that can, by itself, read the literature, propose a hypothesis, design and iterate on experiments, and then kind of points scientists or researchers to a result that holds up in the real world. And I think kind of the AI getting the credit as like being the major driver of like what led to this discovery, which hasn't quite happened yet.
Do you think that will happen with financial modeling too? I feel like we're on the cusp. It's analogous in the sense that, not to sound like a ChatGPT Altman defender like you Teddy. I just feel like when you've got companies like Tempus who have called 1,000 employees who are armed with all this data, who are using various different LLMs that some are homegrown and some that they're using, that it has a massive impact on their efficiency and ability to get to the bottom of different cancer things and treatments and tests and so on. I would argue that if they're having any major breakthroughs, it's as a result of AI now, because they're probably doing stuff that used to take them 20 years and now they're doing it in 20 minutes, and they're just advancing the ability here. And I think you're going to see the same thing on the financial modeling. I think, will it be a little while before it's truly like an AI managed service? A Robinhood managed strategies is all AI, probably. And I don't think it's probably a great idea. We're managing large sums of capital with a machine just yet. But it's pretty inarguable to me that you have the ability with AI to research literally across 1,000 stocks over 1,000 years, find opportunities and find trends and past trends and weird things that then inform a strategist to suggest a new change to their model or evolve their managed services model, which would just never have happened because it would have taken 100 people to be trying to root through all this data, and we can do it in seconds. And so and then the question, of course, Brian, this is straight to you in your domain. It's like, once that happens, the rate of change goes even faster, because now you're not talking about just raw data that's managed. Now we're talking about real human data that's now synthetic because it's been managed and now reproduced. And now the machine's reproducing a third layer here, not to put everyone to sleep, but like, that's what we're talking about. And like, we're that close. I don't know, it's scary, but it's also like that, to your point, Teddy, 26 may well be the year where we're like, holy shit. If you're a financial wealth manager, get better at sales, I guess.
Piggybacking off that, one of the themes, if we're going down the what do I see for companies, right, in terms of 2026, the threshold to create a new software product is so ridiculously low. It is so easy, even especially in the last 2
below
months.
My level, as Chamath would say. It's
these models, like Scott, not saying this in a denigrating way, but like you could take some of these things and build this model that might have taken a full like senior software team months to build. And you could do this over a weekend, right? Like vibe coding or even if you're not using some of these tools, but like for developers who are using some of the models and tools like Cursor or Windsurf or these different things, like it makes them so much more productive. But I think this is like the even bigger unlock. Non-technical people, completely non-technical, can still build like most of these apps with just talking through natural language. And I think if you think of just the innovation unlock of that, where all these people have all these ideas, but they were held back by capital, they were held back by resources of development teams, anything else, none of those things are going to be a problem anymore. And in fact, like 6 months from now, we're going to be probably 2 times as good as the models are right now. And so like, I can't even imagine at the end of 2026, as we're looking back, I don't know if it's the volume of companies, the quality of companies, but I think the amount of innovation, if we're just taking more stuff and throwing it against the wall, right? Like more stuff is going to stick. And I think it's going to get really interesting just seeing what is actually kind of left once all of that. Yes, there's going to be maybe a lot of noise to start, but I think there's going to be a lot of good that comes out of that. And so whether it's biomedical side, like thinking, you know what Teddy's talking about, or financial analysis and modeling and just all the other domains, because we've really seen AI had a huge impact on the coding side, right? Engineering obviously has been good, but I think we're going to start seeing that spill over into these other markets. And for those people who use it for coding, like, you know how invaluable this is as a tool. And I think we're going to start seeing that play out in more industries. So what does that do for innovation? Like, it's going to lower the amount of capital that a lot of these companies need, right? So maybe they're not going to need to raise $1 million seed rounds. Granted, some of them still are, right? Some of them are still going to raise $1 billion seed rounds or whatever the crazy things are that some of them do. But like some of them, maybe it's 50K, and then that gets them enough that they could get way further down the line to then, get to a proof of concept and MVP. So I think we're going to see just lots of new ideas, new companies coming. I think the regulatory backdrop is just a multiplier on top of that, where it's going to be opening up more capital at a time where people are being more efficient. And so it's this, I forget the quote. It's, there's like decades where nothing happens and then weeks where decades happen. And I feel like we're at that part of the curve where there's just so many perfect things lining up in 2026. Granted, all this could change. Something happens, spooks the public markets, liquidity dries up. Who knows where we'll be? But I think that the path that we're on, at least kind of extrapolating out from today, it looks pretty exciting for 2026 from my perspective.
I think you're watching ChatGPT turn into the App Store right in front of us.
Very interesting. So, yeah, I mean, it sounds like, Teddy, you're still bullish on, it sounds like your biomed kind of pharma space, AI innovations going on there. Scott, financial analysis, probably lots of other domains too.
I mean, if I'm putting money in anything right now, I'm looking at defense tech and I'm looking at energy, oil, big time. I don't have to get into the news cycle or anything, but I'm just telling you, it's.
You could buy a barrel of oil for less than an ounce of silver right now. It's kind of interesting. So something's going on there. Teddy, sorry, you were going to say?
And Buffett's out.
What were you going to say, Teddy?
I'm obviously still very bullish on AI, but to your point, kind of saying, where does innovation go from here now that the barrier to entry to create software is so low? I think we're going to see more AI companies than ever, a lot of more shitty AI companies than ever before, but the ones that emerge and win are going to have innovated in a way that wasn't quite possible before. So I think, like you said, it's going to be a very positive net end result, but there's going to be a .com style correction here at some point.
There's going to be a little cleanup. We got a little cleanup to
Yeah.
do. 26
Yeah.
may, I don't know if it comes in 26 or not. We'll see. It's like really hard to tell yet if we've seen the bottom of it yet. I think of my own life of like the late 90s, early 2000s of .com. And when I literally just did a little research study on this like 2 weeks ago on what were the companies that I remember seeing and being like, what in that, like, what is the point of this? Ringtones was one of them, but it actually was a success story. But like, it's stuff like that where you find the bottom. You're like, this literally makes no sense. You're bottling Beanie Babies. We're selling, it's like we've hit fever pitch. And so I'm kind of looking out right now for the AI companies where it's like when I see something really dumb, I don't mean that as like an objective thing. I just mean, like, just in my opinion, it's just not unnecessary. When I start seeing more and more of that is when I would definitely start looking at like, are we hitting that bubble spot when you start seeing companies that are just literally just unnecessary, creating and being given value? That's what happened at the end of the .com.
Where we were a year ago, even with meme coins and, digital asset treasury companies, things like MicroStrategy that were trading at huge premiums, and now they're trading basically at NAV, net asset value. So
yeah,
I'm just sweeping up all the Bored Apes. I'm out there.
They're pretty low right now. Only like 4 ETH, I think, is the floor.
Pretty good. I don't even think they're that much.
I think because of these AI tools, I've even seen some updates from some of the platforms where it's like, hey, these coding tools are so good right now. Look for some huge improvements and changes, like not in the next 6 months, but like in the next couple weeks. So I really hope that some of these investor experiences that I'll say are lacking or a little bit subpar, right, can get a little bit better. Hopefully better tools for reporting. We're going to be launching a lot of exciting stuff for Kingscrowd in addition to Pro, some new tools, better portfolio tracking. So I think the velocity of just improvements, which is going to bring more value to investors, more value to founders, it's going to be, that's going to happen regardless of what the public markets do, right? So I think we will see progress regardless, but it's more of a bigger macro story in terms of what the bigger capital picture looks like, especially around AI, because that's the one that's just seemed like it's been such the hot thing for the past couple of years now, but especially over the 2025, does it continue?
When it comes to new B2B SaaS companies, like we obviously see a lot of them. They get a lot of great pilots. They got a lot of like early testers, users. And then many of them convert and they get a few $1 million of ARR. I think there's going to be like a tsunami of churn that comes because eventually like these enterprises aren't going to they're not going to want to just like keep testing all the new different things. Right now they do because, they want to see which best kind of fits into their workflow, gives them the most efficiency and optimization. But like once a law firm goes with Harvey, like they're not gonna go to something else. It's like, so I think that, there's going to be a serious cleanup in B2B AI, I will say.
Agreed.
I'm going to go on top of that. One of these things, we were talking about this at least more than 6 months ago, but I think we're going to see some big B2B SaaS companies that have just been the traditional go-to. They're going to start having a lot of trouble. I think it's so easy to say, code me up a CRM that does this, this, and this. It's exactly what I need for whatever else, and not paying, thousands of dollars a month. We're going to see some of these big apps that traditionally you had to have that B2B SaaS enterprise application for your company. You could be spending millions of dollars, right, across hundreds or thousands of employees, and to be able to do that internally pretty quickly with like minimal maintenance with some of these AI tools, I think we're going to see people start trying to like increase efficiency, reducing their SaaS spend, and maybe some of these companies will adapt. But I have a feeling that some of them are going to either have to adjust their pricing or will start struggling to keep up with people trying to do their own homegrown tools now, where that cost benefit trade-off just looks completely different with AI.
Yeah, we can do a part 2 of this. This has been a very upbeat episode. We could do part 2 bedlam of what's going to happen once things start to settle in, because I do think that there's a lot. Could go both ways still. It's still undetermined, but if I were to be putting money on things, I think we have enough history repeats itself lessons to be able to kind of project like what would likely happen in the case of this, and then how likely is this, like how far away from happening are we from this? And you put those two together and it doesn't look great for a lot of people.
Especially if you look at these depreciation schedules on these chips that are like 5-6 years, like, ooh. And they can do that because all the new demand with the new chips, right, when they come out, it keeps up. But as soon as demand compresses for some reason, whatever that may be, like all of these neo clouds and these lenders that have been funding these data center infrastructure build outs. It's gonna be a bloodbath.
Someone's been reading Michael Burry's newsletter.
Oh, I thought of it first.
He got it from you. He got it from you. You guys on the East Coast. He was Cassandra's melody was on your blog.
Well, I think we'll wrap it up there. Like you said, maybe we do a little bit of a part 2 and can have some more gloomy predictions, but a lot's changing. It's moving fast. I mean, for anyone who's out there watching, if you want to stay up to date with the latest trends and insights, we're going to talk about it here each week. So, make sure you tune in. We're kind of reading the news. We're looking at everything that's happening, the conversations that are happening behind the closed doors. So we'll keep you in the loop here. Make sure you tune in. But yeah, let's wrap things up there. Good kicking off things. Looking forward to a good 2026. As a reminder, Kingscrowd, check out our offering currently live on StartEngine. Head over there. Make sure you check that out. And if you have any other topics you want us to chat about, let us know. Drop a comment. Make sure you hit us up. Let us know. We'll love to talk about it. And until next time, we'll see everyone back here on the Kingscrowd podcast. Thanks, guys.